That's the opening bell for you on the Nifty. Let's see where we have settled and opened this morning. It's a flat start coming in for the markets, 18,750. The Sensex is also down just around 0.1%, but it's yet again the broader markets which is showing the maximum amount of outperformance. It's 1,000 stocks is advancing to around 300 stocks declining. Sectorally speaking, let's watch out for what the metal space is doing because that's what has been showing the outperformance. Today as well, it's opened with a 0.25% higher. You also have names like Jindal Steel, Adani Enterprises, JSW Steel. They've all opened on the front foot. PVR Inox is also in focus. There's a big release which is lined up over the weekend. So that stock has opened with an uptick of around 1%. IT is on the back foot today. Not very surprising given the kind of moves that we have been seeing of late. So IT is the one which is seeing a bit of a downtick. In terms of stock-specific action, Axis Bank, as we pointed out, is something that we're watching out on account of that block deal which has happened. PNC Infrastructure, because there are reports which are suggesting that there might be some deal buzzing there as well. VMart, wherein we know Mansa Capital has actually increased their holdings, so that stock is in focus. SG Wind has signed an MOU with the Maharashtra government for 5,000 megawatt. That stock is opened with a gain of around 2.5%. Losing side, Tata Chemicals continues the downtrend. Infosys is on the back foot. Prestige, Rainbow, Policy Bazaar, Aisha. These are the stocks which are buzzing around, but not heavy movers at this point.
It's a very sedate, quiet start, but let's see the big buzzer from yesterday, Tata Consumer, and what that is up to, considering it surged up almost 5% yesterday. Axis Bank, M&M, HCL Technologies, these are all stocks which are in focus this morning. Tata Consumer definitely not seeing any follow-through, very tempered for M&M as well. SJVN, after that MOU that they signed with the Maharashtra government for a 5,000 megawatt renewable energy project, so that's another stock. Open smartly, 2.5% higher right now. VMart, Spandana Spurti. Spandana actually is the one key stock that you may want to bring up. They've denied on exchanges, indicating that PE investor Kedara Capital may sell stake in the company to Yes Bank as completely baseless and untrue. Spandana 1.6% higher as we speak right now. KRBL as well, a stock in focus that commenced commercial production of the new plant in Gujarat. There's Abbas Financiers as well, wherein yesterday's small cap world fund sold about 1.6% stake. So these are a couple of stocks which are in focus. Let's just see what the Nifty is settled in at. It's once again a very, very flat start. Let's see, give it a few more seconds and minutes and we'll have more of the liquid rates that come in. But Kunal, any trades that you're punching right now?
I'll go with Reliance Industries as a stock which looks attractive at current levels. I think after 2 days of price action, it's at a 5-month high, have indicated a breakout, and possibly the stock is also on the verge of a interesting weekly breakout in terms of an Ichimoku pattern. So that's a stock which I would look to trade at the open.
What about you, Naresh? What's the first trade that you are punching in?
So looking at Power Grid, looking at a current price of 246, 246.50, add more at 250 or closer to 242.
Rahul Chadha joins us. Let's connect with him and let's understand that is he the reason why FIs are back? Is he buying? Last time when we spoke to you, said that you plan to invest into India. And I think you're a man of your words. That's what I can say. FIs are back.
Yeah, no, if you remember last time we discussed, and this was the China reopening time, and this was the time when Heidelberg report was there, and our view was we were one of the few ones who were taking some money off China reopening and adding to India, and we wish we could have done more of that. But that's something which worked well over the last 3 months. As we talk today, I think some of the valuations in the mid caps particularly are looking stretched. See, the large cap names haven't really participated in this rally, last 2-3 month of rally. But I think markets got a bit exuberant over the mid caps. And we've seen with what Fed did today, where though this one is a pause, but I think what they said in terms of 2 more rate cuts for rest of the year and no cut, 2 more rate hikes for rest of the years and no cuts for 2024, I think that would be a dampener for bulls.
Say that this summer rally of 2023 has now reached the 11th hour, maybe a couple of percentage points, 5-7% here and there, and then we could peak out.
Absolutely, I think we are closer to the peak of this rally.
That's what I thought.
What one also has to understand is this rally also started at a time when Fed expanded his balance sheet by close to $500 to $600 billion. post this regional banks crisis in the US. And now again, we see Fed's balance sheet is contracting. Look, this doesn't take away from the longer term India story, and something which we've discussed before also. What happens is Indian markets will continue to outperform. But right now, particularly in the mid caps, you don't see much margin of safety.
When you say margin of safety is not there, is it largely because of the view on valuations, or you think earnings will disappoint us?
So I think growth recovery is going to be slower. What you're going to see is gross margin expansion, which comes through because of RM benefits, lower commodity prices. But the revenue momentum is going to be slower. See, we've all seen the slowdown in the economy. There were pockets, some select autos, some QSR companies which were doing well. Banks were an exception to it, but I think the recovery is going to be slow from here. So that is one thing. And valuations also are not cheap, looking at the fact that rates may not go in a hurry.
It's interesting that you say autos, Rahul. Hi, morning, firstly. Because, within every sector, you're seeing some stark divergence. And I can pick up any literally across the board, barring, I think, defense or railways or the other manufacturing themes. But specifically in autos, last year belonged to an M&M and a TVS, and it seems like it's a go for Tata Motors and even underdogs like Hero MotoCorp, for instance, this time around. How are you positioned within autos right now?
So I think what you raised is a fair point. Look, though we kind of put them together as autos, but each of these companies specializes in its own segment. And what we've seen is demand being dominant, particularly for two-wheelers for the last couple of years. So that's kind of a coming back. And last year's was this trend of SUVs. It continues to be this year with the end of this chip shortages, etc. So we continue to like names like M&M, Tata Motors, Eicher Motors, etc. And I think these names are still fairly valued compared to some of the other mid caps, which are up 20-30%.
So you have exposure to a lot of auto names, but you also have exposure to the entire new age tech names, the likes of Zomato as well as Nykaa. Are you looking at expanding your portfolio there, deepening your presence?
Look, again, we're happy with what we have over there. Zomato is a name we've liked for a while, and there were good entry points where we increased the exposure over there. I think things are still a bit slow, but look, these names have done a great job in terms of, particularly for Zomato, in terms of gaining market share, and as and when the demand recovery happens, we expect them to bounce back strongly.
What's the contra play in this market, or is there any?
Contra plays would be something like pharma names. What one is picking up from ground, particularly in the US, is that look, there's a different tightness in this pharmaceutical market. The pricing has improved considerably for these generic pharmaceutical drugs as some of these companies withdrew or move out of the market. So I think that is a space which has not done much for last 2-3 years. We've continued to like hospitals over pharma, but this may be the time for some of these generic pharma names.
So you have been liking the hospital names. You do have the likes of Fortis as well as Narayana Healthcare in your portfolio. Is it time now to book some profits and churn the portfolio a bit, or you're happy with the names that you have?
So if you have a 3-5 year perspective, again, continue to hold on to the names. But I would be reluctant to add these names at these levels. I mean, they've done exceptionally well in recent times. Valuations are not in favor. So some cooling off is warranted for these names.
Okay, and what about the entire hospitality segment, the entire urban consumption theme? You did play through the hotels route, but I want to expand it to, let's say, the likes of QSR as well. Maybe PVR, Inox, Phoenix Mills. Any other way you're looking to play the urban discretionary spends?
So in the QSR, a name we've held for I think last 4 to 5 years is Westlife. I mean, that name's positively surprised us in terms of the strong value proposition they've offered to the consumer and how they've stood out in terms of the delivery in the QSR space when the rest of their peer set has struggled. Continue to back that name, but yeah, one would be looking at other QSR names, companies and like Juby, etc., which are great companies, but are going through this temporary period of slowdown. And I think next couple of quarters would offer good entry points for these names.
Rahul, let's understand the risk on the horizon. Monsoons are not great. Interest rates would move higher. A lot of consumer stocks are trading at P multiples of 50 plus. Lot of defense stocks are trading at valuations of consumer stocks. And a lot of railway stocks have started, commanding P multiples of I just don't know what to use as a comparison because they are even higher than consumer stocks now. And there's nothing more higher than consumer stocks.
So I think what you've said, Dekunj, is a fair point. And look, that's why there are no compulsions to be in the market at this point of time. And which is what I'm saying, that look, if you're looking to deploy fresh new money, again, might as well wait. What we've got to also understand is the setup we are in. And this is kind of a quasi-stagflationary setup where the gains we'll get is 20, 30%, etc. at most. And then one has to wait for better entry points for one to make money. I think where you get value here in the market is something like a Reliance, something like, again, financials. The large cap banks haven't really participated in this rally. And that's where it kind of helps them if inflation slightly cools off. So I think that's where it's positive. For a contrarian, IT is also attractive. See, those names may go down 10, 15%, but from a 3-year perspective, we've seen these companies are great compounding machines and they're going to make money for investors.
Pure metals. China is back. Chinese interest rates are going down. The Chinese government is conscious of the fact that tightening is not going to help them, but supporting the economy is something where they need to desperately move. What are the chances that second half China turnaround is stronger than what markets were anticipating, and that could be a booster for metals?
Okay. So again, right now our view is that look, China is somewhat in a deflationary trap, but look, within this structural challenges which China faces, there can be cyclical rallies, and we've seen should government be seized of this risk, which increasingly the sound bites in last couple of weeks are coming through. It may happen that they will extend a fair bit of a stimulus on the housing market. They're already doing on the EV space. There is talk that they may do that on the industrial policy front. If they do with the restructuring of local government debt, that may be positive in terms of boosting the markets. And that may lead to an uptick in metals. But then see, what one's got to keep in mind is that, look, this recovery probably lasts for 6-9 months. And then again, the same set of challenges face China. What we look to play China is as a more of a cyclical market, where we're looking at India is structural market. But even in a structural market like India, one wants the comfort of valuations, at least some reasonable valuations, or some of these risk factor of a slower recovery baked in before meaningfully adding positions, which is why situations like when it happened with the Heidenberg report early this year were great entry points for the Indian markets.
So you will wait for the next crisis. Otherwise you will not buy.
Again, wait for crisis, wait for time corrections, look for good franchises, the likes of HDFC Group or ICICI Bank, which have not done much over last 6-9 months. And I think those are attractive entry points. So I think one's got to be somewhere disciplined about valuations when allocating fresh money.
When markets go higher, the interest is always high. That's human nature, right? When the market starts doing well, you always want to be in that market. FIs were selling last year, and now that markets are doing well, I'm sure they would be tempted to come back. What are you telling your clients who are telling you, Rahul, we wanted to invest, but we were reluctant. Now we are convinced we want to go to India. Here's our commitment. Why don't you go and invest? Are you accepting fresh flows? Are you telling them to wait it out?
Okay, so our message to investors like that is, look, in a market like India, it always pays to come when there are bouts of skepticism, when there is some pessimism, because then you have valuations on your side. What we invite them to put money is in the Asia fund, where we as the managers have the flexibility to move within markets. Look, China, we can say, has structural issues, but there are other interesting opportunities in markets like Korea or parts of ASEAN, etc. And that's where valuations are much more attractive compared to India. And that's where money can move. So I think coming in a regional fund gives that flexibility for a manager to move across markets where you may have structural opportunities, but comfort of the valuations also.
How are you looking to play the entire industrials and capex theme, if at all? Because I don't see much exposure there. Maybe you have a capacity infra in one of the funds, but not a whole lot of exposure to industrials or capex.
Okay, so we've got exposure to the likes of ABBs, Siemens, etc., and we've held them ABB particularly for last 3 years. So that's done reasonably well. Continue to like that space. I think the challenge one is facing is the valuations. And look, now you can see quite a many pockets of fair valuation names which aren't really cheap in the portfolio. So one understands for these industrials that look, they're still in the early stage of their growth cycle. This is hopefully a super cycle which is into a making, started by government's capex and then followed on by the private sector capex. So we continue to like these names. But again, should there be a pullback in market, should the growth recovery kind of take a while, won't be surprised if these names are down 10-15% before resuming their longer-term structural uptrend.
Extending that list to the manufacturing theme, not impressed with the likes of, the Keynes, Dixon, Amber of the world?
I think those names been taking a breather for last couple of years. What happened is some of their end customers were setting up manufacturing bases in the country, and that's where they got impacted. But having gone through a period of time correction for last 2 odd years, those names look interesting. So probably in this pullback that happens in the coming quarter, one would look to add to some of the names.
Interesting. Rahul, always good to have you on the show. Thank you so much for taking the time out.
Thanks for having me.
Okay, here's an exclusive chat as promised with none other than Vedanta chairman Anil Agarwal, who lays out the roadmap for the company, says there is no debt-related concerns for the group, talks about the big semiconductor opportunity and expects commodity prices to go higher.
One thing is for sure, the whole world looking China plus. And they don't find better place than India. Manufacturing is very, very important for any country to grow. And this is a golden opportunity for us, so we can have the massive manufacturing. And people love Indian people. People love because we can consume what they produce and we can export also. The cost of people are literally lowest in the world. Productivity is very high. We have to keep improving to make sure land reform is a big thing, which I have also given a suggestion that people want to sell the land. All our land is digital. Sadbara has been done on digital. How can we develop some portal where somebody put in a bid for the particular plot of land, and if the buyer accepts that price, with the price, the land is his. You don't have to go through those documentation. I suggested this to Commerce Minister Gina, and she was very happy. Number two, they talk about the bureaucracy. Bureaucracy, today's new bureaucracies are very, very cooperative and very important that they are understanding how important to remaining very positive. Benefit of doubt to be given to the entrepreneur. And I have no doubt this thing will take our country forward. For us, three things is very important. As far as I'm concerned, number one is a natural resource. No country can remain a stable country unless the 50% their resources should be developed by their own. Like oil, we only produce 15%. I'm literally a geologist. I can see we have a sweet crude. We have one of the best crude. So we have to produce 50% of our oil and gas. We produce only $10. All in cost is $10. I'm looking forward whereby lots of companies come to India because they find the opportunity here and start producing oil and gas. Our local entrepreneurs should also do it. It's very, very important. Same thing with the gold. Same thing with the copper. So these are the natural resources which will reduce our import bill. We can use that money for development of our country.
I understand you are eyeing opportunities in very high value-added electronics / semiconductors as well. So we will talk about it. But I must ask you, Mr. Agarwal, we've been hearing about it and reading about it all around a lot. So I would urge you and request you to put once and for all, record straight. What is this issue of, debt at the group level, which is rising again and again at the parent level or at the company level? Can you just help us understand where does the situation stand right now?
There is absolutely, with our peer, we have a less debt, we have a better profitability, we are literally lowest cost of producer, and we produce something, there is no competition. This is, if you look at, we have raised $35 billion because I was not being recognized. I came to London 20 years back, 24 years back, and in 88, 89, and I raised this fund, $35 billion in 2003 onwards, and put in all the money there. The money left to be paid because we put in all the money into the Vedanta to make a largest oil company, zinc company, aluminum company, copper company, and you will practically we put $80 billion cash to develop this asset. It can only come with a determination. The total debt in the company is $12 billion, whether Vedanta Limited or Vedanta Resources. Vedanta Resources today have $6.4 billion. Against that, they have a massive asset, which is 70% of Vedanta Limited. They have a Kankola copper mine, which is one of the largest copper deposit. They have a renewable, they have a transmission, they have optical fiber, so many assets they have enough money available to service that. And we are very, very comfortable, never ever been anything happen, but sometime is a market. People do the short selling, people do various things, and it is very important that we should be mature. We have to make sure our country become a developed country.
That's a very important clarification you made, that all your current debt is being serviced well on time. There is no reason to be any worried, and it is asset backed. And whatever little nervousness keeps happening time to time, it has got to do with market kind of function or some short selling. But on the fundamental side, debt is not an issue, neither at the company level nor at the parent level. That's a very important clarification you told us. Sir, I would also want to understand from you, after all, though I was telling my colleague that even if you may be in commodity-led business, but you understand commodities so well, you've been in it more than 3-4 decades. You can ride through the commodities. But fact of the matter is that the demand scenario right now globally is slightly on the weaker side. What are your thoughts on the main commodities you operate in, the pricing scenario, or even the demand volume scenario? How are you reading into it?
I'm very bullish because no new mines are coming. Even all the technology, they need 5 times more metal than what they used to need. We all are working on reducing the carbon. In fact, the report has come where we have been seen in the worldwide, we are one of the best to use the renewable energy. So demand is not going to come down. I'm very bullish on every commodity, whether it's a silver, copper is going to be very, very important metal, aluminum, zinc, silver, these commodities going to go very high, steel, iron ore. This will lead, China has progressed with that. This will lead us because we are huge importer. And prices wise, prices comes, price goes down. It's a lot of on the geopolitical situation, a lot of different factor work. But I have a strong feeling where the prices will move up around 25% more where it is today.
Excellent. That's a very bold statement. Mr. Agarwal, you have electronic and semiconductor ambitions. You've spoken with us earlier, and you see that India can be a base for semiconductor manufacturing as well. There have been some confusion around whether it's happening at your promoter level, unlisted side company, or in the listed company Vedanta. And today we are talking this at a time when apparently there is another semiconductor related policy announcement which is being spoken about from New Delhi. What would it take for India to be successful in semiconductor manufacturing, and what would Vedanta's, how is Vedanta eyeing these opportunities here?
See, nobody wants in the world India to be a developed country. These product, like the way we are taking up our border head on, and this is only because our Prime Minister, these things are happening. He has decided that he wants to produce semiconductor, which has a huge cold feet to all developed country, and his determination we believe and we follow. We are son of the soil, so we understand delay is the fundamental problem in India. Delay. And this is what this government is addressing. We are in this business because we produce optical fiber, the glass business, whether it's called semiconductor, display glass, or this is a glass, is about the clean room, is about the patent, is about the technology. So we are already in this business, and there is no question where we produce glass in Taiwan, we produce in Korea, we produce in India optical fiber. So we are in this business. It's not going to be the easy task, but literally people are saying that somebody can do it, will be Vedanta. I'm just saying what I hear murmur from people, that because it requires a lot of determination, a lot of risk taking, trusting the government, trusting the people. So that's what we are doing. I'm fully committed that if we start producing display glass, what is my vision? My vision is that every 15 years old boy or girl should have a laptop as affordable price, 30,000, 40,000 rupees, a smartphone at 4,000-5,000 rupees, and a scooty. All this require semiconductor and the glass. If he has these three, he will find out his livelihood. Those days has gone where everybody has to be engineer or a doctor or a lawyer. Today everybody has a skill, and whatever is his skill and passion, he'll be able to window to the world, laptop, he can find out. So this is my vision. I will do everything, whether it's oil and gas. I'm in different business, and every business I have taken was very challenging. And only I was looking at how my country can produce this. So this thing also, if this can happen, unemployment will go away 100%, because people will be able to find out their skill and able to move forward. And it will create a huge ecosystem. Vision is to create a larger than Silicon Valley, where 50% people are Indian. They all want to come here. We had a meeting with the hundreds of Japanese. They all have signed the MOU to come and set up their shop here. Koreans are very, very keen, because here is the market. So we are going through a tough time where people never could imagine that India will be able to produce semiconductor. And I 100% give credit to the government, which has taken such a bold step. The whole thing is talking about delay, taking a time. But we are developing country. We are democratic country. We have to use our democracy for a betterment. So this is another thing which will help. Natural resource, government not to be in a business, and third is electronic. We have done.
Right. Mr. Agarwal, you spoke about delay. One last question I want to understand. What's the update with Tuticorin? What's happening there? What are your plans to go forward with it, and what stage is it at now? We see ads in the papers, all of that.
Yeah, Tuticorin again, it is a fundamental. It is only 1%, 1.2% of our total business, but it's a fundamental that we can afford anything, but we cannot afford to stop production. And it has taken almost more than 4 years. The people are suffering because hundreds of industry depend on us. The biggest authority, which is a green tribunal, has given a complete clean chit to restart the plant. They have already given a permission for us to be ready to do the maintenance and to clean up and make sure the plant is maintained very well. We have a feeling that it should happen as soon as the code happened, and they have realized maybe a few months. For me, it's not the question of profit and loss, which is very small, but thousands of industry can run and we stop import. So maybe another 2-3 months we should happen. But Anil Agrawal is the patience and understands son of the soil. And I really believe that time to come, our new entrepreneur will not face this kind of difficulties.
All right, Mr. Agarwal, thank you so much for your time and candidly speaking about all the issues and sharing your vision of how India has changed over the last 14 years of ET now, and of course for decades of you being around in corporate India. Thanks so much for all your support and motivation as always. Thank you so much.
ET which has taken a lead, has supported a lot of entrepreneurs, remain positive. I've always find Nikunj Dalmia talking very positive. Today you also. It is very important that we should remain very positive, because for 10 years we have to make sure we support to our government, we support to our entrepreneur, and not to find fault or something which goes long way in international market and send a wrong signal.
Well, the market has cooled off a tad bit, and I say that because the Nifty is now in the red as we speak, 18,740, but at least that 18,700 print is being maintained. Okay, so we're just around the flat line actually. 18,760 is where we are at. Though it's a Nifty bank that continues the underperformance today as well. It's IndusInd Bank, which is down 1.5%, AU Small Finance Bank, Bandhan Bank These are your names which are the top drags. From the broader markets, Prestige Estate is on the back foot, Anand Raj. So the real estate pack is seeing some profit booking perhaps. And on the gaining side, one stock that is standing out is FACT of Fact. That's high by around 8%, and that's not just the case for today. Yesterday as well, the stock was higher in double digits, 15 to 16% gain, and that could probably on account of this entire Pranam scheme that the cabinet is mulling over. So let's try and understand that better. We have with us Mr. Kishore Roongta, the CMD at Fact, joining us on the show. Mr. Roongta, hi, thank you so much for making time and speaking with us. Could you talk to us about what are the key announcements that are expected from this PM Pranam scheme, and what could be the impact on the company and the sector?
Basically, good morning everyone, to all your viewers. Let me tell you, the cabinet which was supposed to announce the scheme with respect to PM Pranam, unfortunately probably meeting has not taken place, but whenever it takes place, because the government wants to promote the organic fertilizer and biofertilizer so that they can reduce the use of chemical fertilizer. So basically this is an incentive government is going to give, that whatever there is a reduction in the chemical fertilizer and whatever subsidy we saved, that will be passed on under PM Pranam for production of biofertilizer and organic fertilizer, that is at the Tahsil level and the Taluka level. So it is a good initiative taken by the Government of India for balanced use of fertilizer. We welcome it.
Overall subsidy is expected to come down as well to about 1.5 lakh crore rupees, as we understand. Will we see then this impact financials, or will they be negated since natural gas prices also have been falling off late?
Now see, the subsidy has been reduced. If you see the last year 22-23, the subsidy amount was 2.25 lakhs crore, and this year for the 23-24 government has almost 1.75 lakhs crore. So there is a reduction of almost 50,000 crore in the year 23-24. So that is definitely going to have impact on our top line. But as far as the bottom line is concerned, we are not going to get affected. The reason being, the raw material price is also falling down correspondingly. So we are in a better position, we are in a comfortable position.
A year ago, there was the huge geopolitical challenge, which in a sense had an impact on fertilizer prices, especially phosphate-dominated fertilizers, because Russia and Ukraine, that area is a large raw material supplier. Have the supply chains normalized now?
Yes, supply chain normalized, and if you see the Kharif season, we are in a very, very comfortable position. Enough stocks are available. And if you see the international prices also, there is a drastic reduction in the price, not only in the raw material, also in the finished product. If you see the MOP price, the NPK price, the urea price has come down by almost 70%. Earlier it was, we are getting at $1,000 per metric ton. Now we are getting at $300 per metric ton. So there is a reduction of almost 70% in the price. Similarly, the ammonia price has come down. The overall impact is favorable for the country like India.
Over the course of next 3 to 4 years, how do you see the organic fertilizer consumption increasing? Are there any numbers you think you can share with us?
No, sir, because see, when we are going for the organic fertilizer, first of all, we have to educate the farmers the benefit of this organic fertilizer. So definitely, we are not going in a very mega scale. We are going to penetrate into the market in a small way. So once the farmers are get used to, because the chemical fertilizer gives the growth and the output very instantly. Whereas in case of organic, there is a doubt in the minds of the farmer. So we are trying to educate the farmers also as far as the fertilizer companies are concerned and the Ministry of Agriculture is concerned. So we are not finding that there will be 100% substitute of this chemical fertilizer. But of course, even if we penetrate 5% to 10% the total volume, that itself will be a big achievement.
But one of the transitions that we are seeing in the industry is move towards nano fertilizers, etc. What's the launch pipeline looking like for yourself?
The nano fertilizer also, because now we have also tied up MOUs, we have signed with IFCO that we are going to, because our presence is there in the entire southern India. So in fact, we are also going to do the marketing for the nano urea and the nano DAP also. So we have already signed the MOU with the IFCO and we are going to start the marketing very soon.
Revenue potential of that, what could be the overall contribution coming in from nano fertilizers going forward?
No, contribution in the sense of you talk for top line or the bottom line?
The top line.
The top line, madam, the price is not very high. See, because in nano urea, there is no subsidy by the government of India. So definitely the top line will not have very big size in numbers. So it is basically just to see that the subsidy burden of the government of India, which is around 2 lakh crore, should come down. That is the whole purpose of this nano urea, because here the subsidy is not there. So top line will not be there too much.
Bottom line, since you're saying top line might not be much, will it be very profitable, at least at the bottom line level, margin accretive, you think?
Bottom line will be definitely at par with the chemical fertilizer. The bottom line will not have much impact.
You know, we also understand that the government, perhaps, Mr. Rungta, is looking to change the strategy towards sourcing of raw materials as well. And we understand that they've invited global fertilizer companies also to set up manufacturing and storage facilities in India. What can you tell us about this?
So basically, see, the phosphate fertilizer, basically, if you see the phosphoric acid and the rocks and all, we are deficit. We don't have adequate numbers here. So that is why Government of India was planning that we discussed with the Morocco also, OCP Morocco, that in what way there can be a strategic reserve for the India. Those discussions are going on not only with the OCP Morocco, it is also going with Togo, it is also going with the Jordan, and so many other new countries are there in African continents. All the places we are going with a long-term tie-up with them, whether it's a raw material or whether it's finished products. So both the things, government is taking a very good initiative to make a long-term tie-up so that our farmers are insulated for any change in the price, like what happened last year.
Sure, Mr. Rungta, but for FACT itself, what is the capex plan that you've lined up for, let's say, FY24 going forward as well? What kind of growth rates you're envisaging?
Madam, if you see my last 4-year growth, we are growing at the rate of 30 to 40% on year basis. And now in the year 2024, we are going to commission our new fertilizer plant. The work is going in a full swing, and then we expect that the production will be commissioned by July, August sometime, and that will give another 5 lakh tons fertilizer productions to the company. So my total basket size of around 15 lakhs metric tons.
Okay, Mr. Rungta, great to have you on the show. Thank you so much for taking the time out. And of course, the stock has really been buzzing. Let's just bring up the fact stock price up for you, 6.5% higher on a tear. 401 is where that stock is, and it seems like it's a fresh 52-week high for the stock. But here's your chance to unlock the golden opportunity with ET Now on our 14th birthday, which is tomorrow, or actually day after, while we celebrate it tomorrow. Here's our gold contest, and here's your second question that we are asking right now. All, of course, you have to do is give us a missed call on 888 665 9273 to grab this opportunity. Second question then. Which chief investment officer of a large FII joined on ET Now today? Was it Rahul Chadda from Mirae Asset? Was it Adrian Lim from Aberdeen? Was it Rajiv Jain from GQG Partners? Or was it Julian Simon from Goldman Sachs?
ET Now has turned 14, and the golden celebration is on us. Watch ET Now on 12th to 16 June during the market hours from 9 a.m. to 12 noon. All you need to do is just answer one question every hour. To participate, give a missed call on 888 59273 and answer the question. 14 winners will stand a chance to win gold vouchers. It's raining gold with ET Now. Rise with India.
Okay, let's now shift focus from fertilizers to the gas space. Lower gas prices, it seems, are only going to boost volumes. Is there a robust volume growth trend ahead? Who better than Pawan Kumar, the Director Commercial at IGL, joining in on the show right now to explain us exactly that. Mr. Kumar, great to have you today on ET Now. Firstly, give us a little bit of color on how the daily total volume trends are shaping up post the sharp cut in prices that we've seen in the month of April.
Yeah, good morning. IGL is doing around 8.25 MMSCMD per day, and this year we want to reach a volume of 9 plus per day. We have aggressive growth plans, and we are hopeful that every year we will be adding 1 million sales.
Volumes have not gone higher despite price cut, and you're still confident of maintaining 9 million SCMD units?
We have got the new GAs, and and we are putting aggressive capex, and we have a plan to add over 125 CNG stations in the current year. Last year, we added around 82 stations, and the current numbers are around 800, and we expect the numbers will cross 900 by the end of current financial year.
So are you maintaining your FY24 guidance then?
Pardon?
Are you maintaining your FY24 guidance? We understand it was about 9 MMS CMD.
Yeah, that we will achieve. We are confident. See, we are into the new GAs which have very high population density like Hapur, Meerut, Muzaffarnagar, Shamli, then Kanpur, Fatehpur, Hamirpur, and we are getting good volumes. Daily we are adding CNG stations and the domestic consumers, and we are hopeful that we will get sufficient volume.
Mr. Kumar, you're adding the gas stations. It's coming in a densely populated area as well. But are car conversion rate picking up or not? Because from the earlier 16, 17,000, it had come down to 13, 14,000. What's the number right now of car conversions?
Car conversion had gone now to around 12,500 per month, which has picked up again to around 14,000. And with the price stability for next 2 years and the price visibility, we expect that the conversion will go up. We have also seen that many OEMs are launching new CNG variants. Tata, Maruti and Hyundai, they are aggressively doing this CNG models.
What is the trend like at a time when the EV vehicle migration, I think, is very strong, which is that there is a definite push towards EVs. If new buyers are adopting more EVs, that means less of CNG kits would be sold. Isn't that a disruptive threat to your existing business?
Of course, the threat is there, but we think that EV adoption will take place because EV adoption in two-wheelers and three-wheelers is faster. In the four-wheelers and the bus segment is a little slower because it is having its own challenges. And to meet this challenge, we are into talks with the state road transport corporations, where the long-haul buses flying on Delhi, Dehradun, Delhi, Jaipur, Delhi, Chandigarh, and Delhi, Agra. We are expecting that the large fleet will be converted into CNG because now the CNG availability along the highways has improved.
But Mr. Kumar, you would still argue, you'll still agree with me that if you have a CNG vehicle, the experience of getting your tank full takes a lot of time. Lambi line lagti hain sir abhi bhi, and that in a sense makes CNG not that go-to fuel for everybody.
The way the CNG stations are coming up along the highways, the availability has improved and the queue size has also reduced. All the IGL CNG stations have been digitalized, and we have developed the app where a person can see what is the queue size, what is the wait period, and they can select the station accordingly.
Mr. Kumar, but what contribution actually comes from buses and three-wheelers right now as compared to the PVs as well? What's the contribution mix and what is it likely to trend?
See, the bus contribution is around 20%. In Delhi, it's mainly in Delhi, but as we are pouring into the neighboring areas, whatever loss is there, we expect that we will be covering from the long-haul buses.
Just before we let you go, a quick word on the margins as well, because we understand the spot LNG prices have declined quite a bit and they're now hovering below the $10 mark. What could be the margin upside and how will the unit margins pan out from here on?
The current EBITDA, we expect that we will have in this quarter around 7.5 to 8 per SCM.
For the rest of the year as well on an annualized basis?
I think it's going to improve further.
Improve to 8 to 9, 9 to 10? What's the range?
Maybe 8 to 9, but again depends, whether the prices of the competing fuels are being reduced or not. Depends a lot on the petrol and diesel prices.
Kumar, on that note, we'll let you go. Thank you so much for joining us today and talking to us about how the volumes are tracking as well as the entire transition. How is it panning out for IGL at this point of time? For the market, it's looking a bit better. We are now just 100 points away from that live high level. 18,779 is where we are at. Remember that all-time high on Nifty is 18,887. So
let's start the countdown.
We should, because it looks like we're trending closer, and if you look at the mid-cap space, that's already at record highs. So that's been scaling fresh highs. So we'll watch out for that or at the day's highest
point. You know what, guys? Just looking at the top movers in the Nifty,
not much, right?
No, it doesn't seem really convincing. It's Divi's Labs, it's Adani, it's Apollo Hospitals, DRL, and Nestle.
See, Reliance has not done bad in the last 2 days, if you frankly ask me.
Yeah.
I mean, you know, what you need is that Reliance should just push a bit. You know,
maybe one day of that 3% move and
one day of
2 tens.
Yeah, so 50 rupees on Reliance, 25 rupees on HDFC Bank. I don't think Infosys will come. I mean, ICICI Bank. Yeah, you need one of these so-called sumo stocks to just decide that they are not going to rest. They really want to take a pole vault. So, little bit of push. The countdown, please. 100 points. I always like it.
Yeah,
the ring
but
of
you know
a new
what?
all-time
Kunal's
high.
chart is Reliance. So let's take it across to him and find out whether the sumo Reliance can actually move or not. Kunal?
Well, yes, Aisha, I think it's also countdown for Rasgullas. I think that's pending from Nikunj's end this time. Let's hope.
I'm betting on the Sensex, not the Nifty. I'm old timer Kunal.
So Sensex is just, I think, 200 points, 0.5% away.
Sensex mein dur hai. Reliance has to work for Sensex has to go higher.
Okay, good. So today's stock which I've highlighted is on Reliance Industries, and one of the specific reasons for highlighting Reliance is a very interesting, indicator breakout. It's an Ichimoku pattern breakout, and we've seen that happening twice for Reliance Industries in the last 6 to 7 years, 2017 and 2020. So this is the point where one of the paths for the Ichimoku indicator heads into a breakout. This is what we call as a cloud pattern breakout, and whenever that happens, it actually results into a major upside for Reliance Industries. We've seen that in 2017, 2020. 2017 was a point where Reliance Industries ended a 10-year of consolidation and started a major uptrend. 2020 is what we know what happened post-COVID. The stock rallied up, and I think from the breakout point of 1100 approximately, the stock more than doubled. So this could be a very interesting point of a breakout for Reliance Industries. The stock is coming out of the indicator is coming out of the major cloud pattern. The stock is also coming out of a major cloud pattern breakout. So I would expect not just 2600 for Reliance Industries as an immediate target, but possibly a retest of the all-time high levels and crossing above these levels of 2800, 2850 in this move of uptrend for Reliance Industries. So extremely bullish on this large cap name, and I believe that this could be one of the prime stocks which should take the index back towards an all-time high.
Okay, so that's about Reliance, and that could be one of the factors that will bring us closer to that all-time highs. But Naresh, which is the stock that you are penciling in? Is it a heavyweight that will help us towards that all-time high levels, or a mid-cap coming in?
So not really a heavyweight, but a large cap, Grasim. The stock is making a huge cup and handle formation over the last almost 1.5 to 2 years. A classical cup and handle with multiple attempts around that trend line. Today it has given a breakout above that 1750, 1800 zone. A clear breakout done, and the whole cement pack looks interesting with 52-week highs in a lot of names. So Grasim could be the one which could make a breakout move towards 2000, 2200, keeping a strict stop loss at 1720 for this one.
Right, let's also get in some stock strategies. Kunal, on your list?
Focus on few mid-cap names. Paytm is a stock which is back into momentum at 850, 60 approximately. So would suggest a buy with 900 as a target, stop loss at 840. And Daawat or LT Foods is also come back into momentum and highlighted a target of 134 a couple of days back. Now I believe at 133 odd levels, the stock looks for a decent upside of 140. So traders can hold on to the stock with a revised stop loss of 129, targets of 140.
Right, Naresh, what about your stock ideas?
So first would be a buy on Metropolis Healthcare. The stock has corrected a lot from the top. Bounce back trade here, a strict stop loss at 1320 and a target price of 1450 in the short term. Second is a buy on Bandhan Bank, retesting the recent breakouts, a stop loss of 244 and a target price of 270.
Okay, so that's about Bandhan Bank, which, Naresh is suggesting at this point of time. Taking a short break with the news that the market is towards the highest point of the trading session. It's Poly Medicure, which is up 8%, GE Shipping, Jubilant Life, SJVN, PNC Infrastructure, Godrej Properties. So very vibrant market at the stock levels. We'll track all of that when we come back after this very short break.